This is how you can consistently get high risk to reward ratio trades using liquidity concepts. What is going on, guys? I hope you are all doing well. In today's video, I'm going to be taking you through a strategy that I personally use to get high risk to reward ratio trades using the idea of liquidity in forex. So if we get straight into the video, I'll take you through the criteria for entry first of all, and then we will go into some examples just to clarify. Alright guys, so before we actually get into the examples, I'm just going to be taking you through the actual criteria that we use to enter and what we are actually looking for. So I'll go through the examples after, like I said, just to make this a little bit more clear. So bear with me if it sounds a little bit confusing at first. So point number one, as always, we're going to make sure we are aligning ourselves with the higher time frame trend, as we don't really want to be trading counter trend with this strategy, as it can give a lot of false signals. So step number one is to just identify the higher time frame trend, and what I mean by that is look for whether demand or supply is in control, or more simply you can just look for whether price is printing higher lows and higher highs or lower lows and lower highs. So yeah, step number two, what we want to see is we want to look for higher time frame POIs or areas of supply and demand, and we want to wait and see for price to react from those areas. So put simply, we just wait for higher time frame supply or demand areas, obviously in line with the trend. So we want to make sure that our areas of supply and demand are within the current leg of the trend. We don't want to be looking for areas that are, you know, miles away, where if price was going to come to that area, it would no longer be in the same trend. I'll explain further what that means in a moment. Step number three, we want to wait for a clear area on the lower time frame of supply and demand. So first of all, we're going to wait for, on the lower time frames, a break-in structure for the order flow to go from bearish to bullish or bullish to bearish, depending on what side of the trend you're looking at. And after we get that clear change of character, we want to see a clear area on the lower time frame of supply and demand. And I'm also going to outline a few criteria that have to be met for that to be a valid area. So this is really where the liquidity comes in as well. So if we just write this first, lower time frame, change of character in the higher time frame area. Step number four, we want to wait and see for an imbalanced supply or demand area. Obviously, again, depending on what side of the trend you are looking at. If you're looking for buys, then it's demand. If you're looking for sales, then it's supply. And further, and this is where the liquidity comes in, we want to also have that the areas of supply and demand take liquidity, and they also have liquidity above or below them. So if it's an area of demand, for example, we want to wait for the price to be generating liquidity above that area of demand, and obviously for supply it's the opposite. So we're waiting for price to induce liquidity below that area of supply for then price to come up and liquidate those people and then go in our intended direction. So yeah, step number five. This isn't really a step, it's more of a criteria. So for the supply and demand, we need liquidity taken, and I'll show you more what that means in a moment. And we also want to have, if we do this as a separate step, liquidity induced above or below the supply and demand areas. So yeah, this is the entire process that we're going to use. So yeah, if we get into some examples now, the first example I believe was beginning of June. I'll also pop up a screenshot right now of the before picture, so you guys can see that we did actually take this trade, and this isn't just marked up on bar replay. Okay, so step number one, if you guys remember, was to highlight the higher time frame, or identify even the higher time frame trend. So in this case, we clearly have a bullish trend. Prices printing these higher lows and higher highs. We are coming back, respecting demand, and and demand is clearly in control, so therefore buyers are clearly in control. What we want to do now is we want to highlight a few areas where price could potentially react from. So in this case, it's quite simple because we literally have this break of structure on the 4 hour. So this is the most recent higher low. This is the most recent higher high. So if we are expecting the trend to continue, if we look left, price has just come into this open imbalance. So the trend really has no reason to reverse at this point until at least we reach this area of liquidity above. So yeah, we are expecting the trend to continue at this moment in time. And therefore, this level here should not break if we are expecting those further buys. And therefore, this would be sort of our higher time frame area of demand. As you can see, this is this last sell candle. Before this big push up, it was also left imbalanced. So it is a valid level of demand. You can also see as well, this candle took liquidity to the left, which makes it a lot stronger as well. So what we're waiting for now is, like I said, that lower time frame change of character or change of trend. In this case, if we just wait a little bit, we get the change of character just here. If we draw that on, because price printed a lower low just here, close below the bodies, and then price broke this structure, printing a higher low and a higher high. However, at this point, we aren't really looking for any trades because there aren't any areas to enter from. Remember that I said we need areas of supply and demand that are imbalanced. All of these ones here have been efficient since they have been filled. So we've created imbalance. We came back to fill it, created imbalance just here, came back to fill it. This one was already tested by the wick. So we just hang on and wait a little bit and see if an entry presents itself. Okay, so now if we play price on a little bit more, okay, so this is exactly what we want to see. So if you remember the criteria for entry, we have to, first of all, make sure we are aligned with the order flow, meaning that, right, so if we highlight this as the break of structure, we don't want to be entering from any areas that are below this current leg of the trend, because then we would have considered the trend to have broken and price would then likely continue down. So our range for looking for buys is from this low to this high, since this is the most recent higher low. If price comes below this low, the trend has broken and we are no longer looking for the buys. And the second thing, we wanted to highlight the area of demand, in this case, this area just here, which created imbalance like we have just here. We also have to have that swept liquidity. So in this case, if you guys can highlight where the liquidity would be. So in this case, we have this area here, which looked like a higher low, and then price impulsively moved down, took out the people that would have been buying here. You know, they may have been using a fib or something like that. If we draw that on. So yeah, these people may have been entering from like the 50% of the fib or something like that. Price then comes down, takes them out, impulsively moves back up, leaving behind this imbalance. And what we have also started to do now is we have started to generate liquidity above and also below. Notice how we have this sort of descending channel where we have these sort of like descending lows where people are buying above the demand. That is our liquidity. And all we simply do now is enter with a limit order on this area. And in this case, we can just target the current trend high. Notice as well, as price was making its way down towards this area of demand, we were also generating liquidity here in this sort of trend line, which gave me a further confluence to enter this trade. And there we go. This was a news event, came out, hit TP instantly. Well, pretty much in like 30 minutes. So yeah, if I'll go through another example now, as it is quite confusing to get a hang of. So, second example was a nice trade on USD CAD that we took last October. So, as again, like last time, we're going to identify the higher time frame trend first of all. So in this case, looking on the 4 hour, we can clearly see that we've had this 4 hour breaker structure. So overall, the trend is still bullish. As you can see, we are making higher lows and higher highs. Price is trending upwards. And crucially, we have come into this higher time frame area. So this would be the extreme demand of the current leg of the trend. The current leg of the trend being from this low to this high, as this was the higher low and this was the higher high. This is the extreme demand because it is at the bottom of the range. And as you can see, we also have left this imbalance in here, making it a very valid level of demand. We also sort of left this area here as well, which price needed to come and sweep. And now we go down to the lower time frames and wait and see what happens. So at this moment in time, what we're looking for is for that change of character. And we also want to be looking at any areas of demand which were left imbalanced. And we want to see liquidity being generated above that area. So in this case, notice how we had this initial tap of our level of demand. Price started to move up. So most people would have been buying at this point on the original tap of this zone because it is an area of support, and that is a common retail entry method, just to enter on an area of support, maybe after they saw this engulfing candle or something like that. Price then comes down one more time, takes them out. So we have a sweep of this low. Price then fails to hold this area of supply. Notice how we got like this sort of consolidation at the area of supply. Some people would have been selling there because it is an area of supply. However, what price did, we have this failure of supply, meaning that is our change of character. Sorry guys, the camera cut out on me there, but as I was saying, we had this change of character here. Since price was printing a lower low, a lower high, a lower low, then we get a break of the structure, meaning the trend has now changed at our key higher time frame level, which is very important. You don't want to be just looking for random changes of structure in the middle of the trend, as normally they won't hold. You want to be making sure they are in a higher time frame area of supply and demand, like I mentioned before. So we have a sweep of the low, taken out the early buyers. We then have a break in the trend as seen by this change of character. So what we are looking for next is, if we refer back to our criteria, we need an imbalanced level of demand. This is the imbalance left over. We have this area of demand. It's an area of demand, as you can see, because we have this sell candle, and then after the sell candle, we have this big leg up, creating all of this imbalance. However, we also need one more confluence, which was, as I mentioned, the liquidity being generated above the area, which we have just here. As like before, these people here are people that are buying on some sort of like fib retracement, or maybe like a break and retest of this area. But either way, they are buying in the middle of the range, so they are likely to be taken out, and this is why we are seeing this level as a liquidity level. On top of that, we have this imbalance below as well, where we know price is likely going to gravitate towards and fill. So, like before, we just simply set the limit on this zone, stops a little bit below. Sometimes price, remember, likes to wick out areas of supply and demand, so always leave a little bit of room. You don't want to just have the stop loss like this. Sometimes it works, but sometimes, like I said, you will get wicked out of the position and then it will go in your favor. As for targets, we will wait and see how price is behaving at the time. Okay, so for the target, I would simply target this current high, as that is the most recent high that price created. And there we go. Almost got a retest of the entry. but ultimately price hits the take profit. So running through that one more time, price comes into a higher time frame level of demand. Price swept the initial tap, then broke structure, giving us that confirmation entry. Price then left an imbalanced area of demand below an area of liquidity that was generated. Price then comes down, taps into our area, and seeks liquidity in the opposing direction. So it took out sell side liquidity, and then it is going to search for opposing liquidity. So in this case, buy side liquidity, which was resting at this current high because that is where people would have been selling. So I hope this is clear for you guys. If it isn't, leave a comment in the description below asking any questions you like, and I'll get back to you. Also, make sure to like, subscribe, and yeah, thank you guys for watching, and I'll see you in the next video.